We're 3 hours into trading on Friday, December 3rd. Hello, traders. Let's take a look at the last pick. Whoa, that was a really nice one. Facebook short. Last video that I recorded and posted was near the open on Wednesday. You can see this is about where the video came out right in here. Let's go back so we can capture that. I did not do a video yesterday. Super busy. Gaps up right there. Spends the rest of the day drifting lower, has a horrible daily chart. So we know on a daily basis we like it as a short. Also, it has relative weakness, and we know that because the 10 SI indicator in Option Stalker is below zero. So orange line below zero, relatively weak, great short. Stock fell apart the rest of the day Wednesday. Thursday, market bounces. Big rally in the market. What did Facebook do all day Thursday? Nothing. Couldn't get off the deck with a big market rally. What's that tell you? That tells you that institutions are playing whack-a-mole with that stock. It cannot get off the deck, even with the strong market, even with everybody buying up every other stock in the market. Facebook could not get off the deck. Relative weakness. Today, market, gap higher, gap reversal. What does Facebook do? Yow. Or Meta. I guess I'm supposed to call it Meta now. Anyway, big sell-off. There's your daily chart. That long red candle broke that upward sloping trend line. It also broke major moving averages. Let's put those up. You can see the 200-day came into play. So first of all, for your shorter term day trades, I like to have a daily chart that's working in my favor. So when I know that I've got weakness on a daily chart, then I know I can zoom into a 5-minute chart and look for that relative weakness, and then I've got a good short on. So you can see beautiful follow through. So let's be fair about this, because I always like to play both sides of the coin. I'm trying to be super transparent about everything that's going on. I'm going to get into a lot of education today, so bear with me here. But when I did the video, I was also highlighting a couple of bullish stocks. And when I did that video, Apple and Home Depot were two stocks that I ran a search on. And I said, listen, look at the market. The market is all over the dang board the last week. Long red candles, long green candles. So we need to be ready to trade either side of the market. So here's what was happening when I did the video is we had this high here. We had the market coming in. I drew a downward sloping trend line. And I told you, I said, you do not buy Apple until the S&P 500 can show you that it is rallying above this downward sloping trend line. And if Apple has retained its relative strength, and Home Depot was the other one that I showed you, then you could buy the stock. So you need two conditions. You need the market to rally above the downward sloping trend line. Never happened. Market first, market first, market first. I don't care how strong a stock is. That is a temporary condition because eventually when you get a market decline of 50 S&P points, everything is going to get nailed. Sooner or later, they're going to come around and nail every single stock. But what that relative strength gives you is it gives you an opportunity to evaluate the market. I'm going to give you a really good example in a few minutes here. And it gives you time to exit. It gives you that cushion that you don't have when you're just trading the S&P 500. So the market never got above this downward sloping trend line. There was never a reason to buy Apple or Home Depot on Wednesday. So no, I'm not going to say that that was a losing trade because given the instructions I put forth, you never had a reason to buy it. So we can take a look at those stocks this morning as well to see how they're faring. But yes, the market sold off the entire rest of the day. And since then, Apple has actually had some negative news. So let's go in. Let's take a look at the daily chart first on the S&P 500. Everything is centered around what the market's doing. Let's put up the major moving averages so we can see exactly where they come into play. The 50-day and the 100-day are the only two that we care about. because they're the only ones in play today. You can see how the 50-day moving average, we've breached it. And we're going to come down and test that 100-day moving average. I'm pretty sure of it now. And I had mentioned that 452 was a beautiful horizontal support level that coincided with that 50-day moving average. That is a major technical support level. We're going to have a choppy move lower because the market's been in go-go mode for the last year. Put up the weekly chart. That is a huge rally upward. Draw this trend line right here. We want to make sure that that's preserved on a weekly chart. And so if you connect this and this, you'll see exactly where that line comes into play. And it's at about 444. Okay. Make a mental note of that. Let's see where that 100-day moving average comes into play. Well, it comes into play at about 448. So we know 444 is a support level. Let's put up the 200-day just so we know where that comes into play. A lot lower down here. That looks to be a major technical support area. I don't know that we're going to get down there, but in any event, I think the 100-day moving average is within striking distance. There's something that's forming here that is concerning on a longer term basis. So I want to talk about the market. The character of the market has changed. This drop that we had in October was much heavier than we've seen in the last year. Okay, you could say, well, it's seasonal weakness. You know, we always tend to see weakness in October, but then we rally hard. And we did. We made a new high. This is the tell. Remember when things don't do what they're supposed to? That's the tell. So in this particular instance, December and November are typically really bullish months. And you see the market floating higher and floating higher. This would be typical price action. And you would finish the year just kind of floating higher and then kind of flatlining and going sideways a little bit. But overall, a decent bid to the market and a gradual move higher. The fact that we are seeing this type of bearish price action is a red flag. This is a warning sign. Awareness is a huge part of trading. You've got to be aware of everything that's going on around you. And yes, that includes international markets, international economic data points. If you're strictly technical, then use your technical analysis on those foreign markets and bring those charts up and see what they're telling you. It also means that you need to take a look at what bonds are doing. You should also take a look at what implied volatilities are doing. So we're going to take a look at VXX. This is different than what we've seen in the past. Traders have been playing whack-a-mole with option implied volatilities for the last 10 years because interest rates are low, the risk is low of any kind of credit concerns. So the market has not had a lot of uncertainty because it's the only game in town because you can't make anything in the bond market, so everybody's pushed into equities. But look what's happening. We're having a persistent move higher in option implied volatility. That tells me that uncertainty is starting to creep into the market. That's not a good sign, especially during year end. This is a time when asset managers tend to be very passive with their selling. They want to take advantage of those year-end rallies and they want to mark up those portfolios so that their assets under management are as big as they can possibly be because that's how they get paid, percentage of assets under management. That's why probably 95% of Decembers are bullish and Novembers. You get that nice little year-end rally. When you don't have that year-end rally and December ends up being weak, that is not a good sign for 2022. So beware, be very, very careful. We're seeing option implied volatilities move up. This is different from before. The other thing is, what is TLT doing? This is the US 10-year Treasury. So we get a really weak unemployment report today. We only had 210,000 new jobs created. This is a very seasonally strong time of year for people to find work, and only 210,000 jobs. Well, everybody's saying, well, this gives the Fed breathing room, and so now they aren't going to raise rates quite as soon. And you can see how TLT is rallying up, in fact, breaking out to a new high. This is a flight to safety, in my opinion. Well, how the heck could you say that, Pete? Come on. If the Fed's going to be holding off, then of course you're going to see bonds rally. They aren't going to be able to hold off. You just heard from the Fed this week. Jerome Powell testified before Congress. He said, hey, that transitory word with regards to inflation, strike it. Get rid of it. Wish we never used it. You know what? Inflation is a lot more persistent than we've seen. So we think it's going to be prolonged, and as a result, we are going to accelerate our tapering. That means that a possible rate hike will come sooner than we expect. And with prices rising, that is putting upward pressure on interest rates. There are central banks around the globe that are easing on their quantitative easing, and they are also starting to raise interest rates. So there is upward pressure on interest rates. Well, then why the heck is TLT rallying? It's because there's a flight to safety. So we are in risk off mode, in my opinion. So let's go back to SPY. I'm just trying to give you a macro overview. To this point, for the last 6 years, it's been super easy. Just buy, 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 buy every dip. Things are starting to change. The weak December, the rising VIX, the rally into TLT when we're seeing higher inflation and higher interest rates. None of that makes sense. You start seeing some disconnects. That's a time to be very cautious. You can also see here that we've got the 10P indicator. Yes, it can be used for longer term trades if you understand it. And you can see here that we had a really nice bullish cross right in here. That was a great one. Here we had a bearish cross right about in here. It's early. This is a predictive indicator. It is not a reactive indicator. It's a predictive indicator. Upward sloping trend line, breach to the downside, bearish 10P cross. Okay, it's been bearish in here. The fact that we're seeing it distance itself, this is widening out, tells me that there's more downside to come. So I am a bit bearish in here. And you can see how the market tested the low from Wednesday. We've got a nice little bounce. So we've got some green candles stacked here. This heavy selling here, this is also a gap reversal. You've heard me say many times with the market near its all-time high, there's no need to come in, rush, buy on the open when you get these gaps higher. Anybody that did, bullish speculators, got their fingers slammed in the door. Long red candle, long red candle, long red candle. Very little overlap. This is a sign of trend strength. Also tells me that the first bounce is simply going to provide us with a better entry point for our shorts, because that would end up in a bear flag formation. Long red candle. Now I'm going to get into some technical analysis on the S&P 500. So if you're an S&P futures trader, please pay attention. So when you see these long red candles like this, no overlap closing on their low, it means that you want to get short. You're just looking for a decent entry point. Yes, this is kind of a combination of some bullish, like a bullish engulfing candle if you look at it on a 10-minute basis, but this is just a bounce. And if these bounces last 15 to 20, 25 minutes, and then you see more selling pressure, you know that it is a bearish flag formation. If they start, the sell-off ends with a bounce that lasts 45 minutes, an hour, hour and a half, then you can be pretty confident that that low of the day is going to hold. So in this case, we get about a 20-minute reprieve, and then this long red candle is where I reshorted. I knew that when they attacked the low of the day with this type of vengeance, we were going lower. So let me talk a little bit about this red candle. Let me talk about a pattern that you don't want to trade too much. So a pattern that you don't want to trade is you get this nice rebound, and let's say that we didn't have heavy selling like this, that it was a little bit more mixed and a little bit more choppy on the way down. So you get this first bounce, and then you get tiny red candle, tiny red candle, tiny red candle, compress, compress, compress. That you do not want to short, because those oftentimes will lead to a long green candle, because shorts are loading up, loading up, loading up, and then you get that release on the upside. Ultimately, that would be a double bottom, higher low, bullish, okay? But in this particular case, when you get this little bit of a bounce, that's all it is it's a bounce. We knew that the selling pressure was heavy here because of those long red candles stacked. So we have to assume that this is going to be a bearish flag formation. Now we need to patiently wait for signs that it's a bear flag, and that long red candle and that attack at the low of the day tells us, yep, get short. So you don't need to put the whole position on at one time. You'd want to see what the next bar does. Well, here we go. Rally, 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 rally. Well, we get to the middle point of this long red candle, and that you would want to see hold if you're short. And it does. And so we start drifting lower, lower, lower. So now you start adding, because as the candle starts to finish, you can see that there was very little retracement and that it's going to hold all of those losses. So it validates this candle right here. And then lo and behold, the next candle takes out the low of the day. See you later. Here's another tell. When you start getting these mixed candles with overlap in here, it tells you should probably take profits on that because there's a bounce coming. Well, here you get a nice long bullish engulfing candle, and you get a little bit of follow through. That candle's problematic because it erases these two, and it tells you that, well, we're not quite out of the woods yet. So now, as I look at the market, back in here, I was fairly confident. Just because of this gap reversal and these red candles in here, I was pretty confident we had a bearish trend day forming. When I saw this follow through, I knew we had a bearish trend day forming. Now we've got a little bit of a bounce. This is the low of the week, the low from Wednesday. These are decent candles. It tells me that this support is going to hold for probably the rest of the day, I would imagine. That's a pretty tall order for me to call that low of the day is going to hold, because we've seen some very heavy selling pressure. So you need to be careful with that mentality. But what I can tell you with a very good degree of certainty is that we're not going to see much of any rally or decent bounce today. Maybe we get something in the last half hour, maybe in the last 45 minutes, but the more likely scenario is that we get a series of bounces, tests of the low, bounces, tests of the low, and we spend the next few hours right at the low of the day, and then maybe a little bit of a closing rally, but not much of one. Not much of one at all. So this is very bearish, negative price action. So how does that translate into a decent trade? Well, you know that I like Facebook, and I can go through my searches and show you some really good stocks, but I'm going to cut right to the chase because I got another lesson that I want to teach you. I want to teach you how relative strength works and why it's so dang powerful. But I'm going to show you a couple of shorts that I like, and these were shorts that we were on early in the trading room. Coin, very, very weak. Long red candle closing on its low, long red candle closing on its low through the 50-day moving average. So, yes, extremely weak. This morning, stock came down and tested the 100-day moving average. You can see that the 100-day moving average was at 272 roughly. So we're going to go into the chart and look at 272. So once it's testing that 100-day moving average, you don't want to take any action on it. You want to wait to see what the market's doing, and you want to evaluate the stock at that price point. Well, 272 was right in here. And so you get a little bit of a bounce off of that 100-day moving average, and then you tuck right back below it. Combined with a weak market, that's a good entry point. There's your bearish flag. Good entry point for a short position. I still like coin as a short. A lot of the crypto stocks, Mara was another one, also very weak. And if you go into the daily chart, you can see that Mara didn't have nearly those issues on a daily chart as coin did, because it was already through this horizontal support level, already through the 50-day. So it was my choice for a short. and now it's bounced off the 100-day. So I would be favoring the short side, not only today, but I might even start favoring it. To this point, I've been pretty neutral in the last week, just looking for opportunities on both sides of the market. The other thing on the short side is that because we have been in a longer term bull market trend, the short side is very, very difficult to trade. And that's because you see tick, 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 tick lower, and then blam, you get these big candles that make it hard to short because it wipes out all the profits that you've made for 20 or 30 minutes. So you really should try and look for those long green candles to try and get short. You also have the market having these big spikes like that and like that. So bull markets die hard, especially ones that are going on for 12 years, ones that have been going on for 2 years, very, very strong. There are always going to be buyers out there, so you're going to get these snapback rallies. So when you're short, you get this big drop. This is where you want to be taking profits because you're starting to see a mix of green and red candles that tells you that support is forming. Get this big release in here, nice long red candle, some follow through. This is where you can reshort. Get this nice big drop in here. Okay, that's all good. Green candle, bounce off the support level here. Yeah, I should probably be taking profits. So here's what we would need to be aware of on the short side. If you're looking to short this market, you don't want to deal with anything that comes down and just nudges through the low. What you'd be looking for is a nice long red candle like this, and then another nice long red candle like that. Easily through the low of the day, absolutely obliterates it, just blows right through it and never looks back. When you see that, then you know the selling pressure is super heavy and that there's likely to be follow through selling on the downside. Going to the 15-minute chart, we can see what else we've got standing in the way besides that low of the day from Wednesday. And I'm sorry, my computer's a little bit late responding here. I'm going to have to go into maybe even a 1 hour chart to find the next support level. We're kind of in no man's territory here. We'd have to go into a daily chart as I did before to find that support level. So we take out this low, we've got a decent amount of room to run on the downside. So let me backtrack a little bit and let's take a look at a setup. So you've got, and this is my rationale, and I put this statement out in the chat room and I said, okay, we've identified that Hewlett Packard has relative strength, and we all kind of like that chart. We think it's a really nice stock, and it's acted well today given this big market sell-off. Hewlett Packard has held its own. So, do I want to be buying Hewlett Packard in here? No. Why? Because the S&P 500 has stacked these long red candles, and this is only a bounce. Do we want to watch Hewlett Packard? Absolutely. What are we going to be watching for? A rally. When the market does this, we want to see the stock lift off. When the market pulls back like this, we want to see the stock tread water. That tells us that the buyers are still lined up. So if Hewlett Packard starts to lose its relative strength on a move like that, then you have to look for another stock. You have to look elsewhere. Down in here. Okay, now things are a little bit more interesting because we're starting to see mixed candles. We've got a bullish 10P cross. Talk a little bit about this also. So we've got a bullish, oh, and there goes Apple. That's another one I've been watching. And that's how we trade Apple, is we draw our downward sloping trend line. When that downward sloping trend line was just breached to the upside, I just got a pop-up alert. Well, you can see Apple in here is strong, but so is the market. The market's starting to bounce a little bit. You'll notice, though, that Apple has been very stubborn selling off and that it has had relative strength most of the day. So anyway, yes, Apple is looking good. Let's put up that Hewlett Packard chart because this is such an important point that I want to bring home. And I'm going to put up an SPY overlay because it'll be easier for us to see it on a chart. But as the market comes down into this level, so this green, red, green, red, green, red is right here. And you can see how Hewlett Packard actually was higher than the open, even with this huge market drop. So it looked like it wanted to go. This is actually a pretty nice pick. right in here. I said, so you can start to nibble right in here and right in here. So you can start to nibble on Hewlett Packard, given that the market looks like it's going to find support and that we are close to the low from Wednesday. So in here, we're pretty close to the market low from Wednesday. So yes, we should start finding some support in here. See how we found support right on that low? Tried the downside and then we bounced right away. This is a nice bounce. So remember, I think we're going to spend time down here the rest of the day. But yeah, nice bounce. Are we back off to the races? Probably not. So anyway, on Hewlett Packard, it holds its own, it holds its own. Okay, so now the market is starting to rally in here and you've just started to put a position on. Now is when I want you to really pay attention. So Hewlett Packard is making a new high of the day and you've just started to nibble because you suspect that there's a market bounce coming, but you're not looking for a gangbuster rally in the market. You're just looking for a little bit of market and a stock release that you can take advantage of. So we start seeing the market head higher, and then all of a sudden, the bottom of the market falls out. So let's go back into that 5-minute chart here. And this is exactly what I was talking about. And this is the reference point. So market up, up, up. Excuse me, this is the reference point right in here. Market up, up, up. And then you get this red candle right in here. And you can kind of notice where it is time-wise. It's right in here. And so you've got the market falling apart right in here. Put the crosshair up so you can see exactly how this times out. Okay, so market has a dip right here. Oh, green candle. Market has another ka-chunk. That was a big one. That was a big red candle. Huh. Tried to rally through the high. Inverted hammer. Bearish hammer. Okay, now I know I got to worry about the market. This is not what I expected. I expected boing, 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 higher, higher, higher. This is not what I expected. So right here, you exit Hewlett Packard. You just started nibbling. You don't have a full position on. You probably scratched the trade. Maybe you take a tiny loss because you only started scaling into it and you didn't get the market right. If you had bought the S&P futures right here on that same notion, you got your ass handed to you because the bottom fell out. But because you traded relative strength, the stock held its own. And it gave you an opportunity because it stopped dead in its tracks and it didn't go higher. You had an opportunity to scratch the trade. That is the cushion. That is the edge that we trade. There aren't very many trading edges. This is one that I found about 20 years ago, and I've written about it 16, 17 years ago. You can go back and check. This edge still exists, and it is a tell of what the institutions are doing, and that's why it works. So if you watch my videos day in and day out, you can see how the picks are working. That's the secret sauce. So let's go in. Let's see if we can find a stock that we like on the short side. I've already shown you some of the cryptos. I think they look good. And let's see if we can find something that's good for a day trading swing and maybe something that is good for a overnight swing. And again, boy, I have to qualify this. Your overnight swings should be minimal. With this kind of market movement overnight, long green candles, long red candles, who knows what's going to happen the next day? You get these gigantic swings. So you want to really focus on day trading right now. But we're going to see if there's anything that looks very attractive to us on a swing basis. I'm going to focus on the short side because I see things starting to set up. DNA, that chart looks very weak to me. You can see the breakdown. So that's one I would put on that short list, breakdown through horizontal support, but pretty choppy stock. Diddy had news, breaking horizontal support, not a favorite. breaking support right here. Oh, that brings up another point that I want to make on a longer term market basis, but that's pretty good right in there through the 100-day moving average on LI. That looks pretty darn good to me. NIO, ugh. I mean, ugh, from a long standpoint, pretty decent as a short because you can see the bottom falling out of that. That looks pretty good. Tesla's been a great short. Microsoft, whoa, that's been a stalwart. Breaking horizontal support, got the 50-day to get through. So eventually the baby gets thrown out with the bathwater. I don't care how great the stock is or the fundamentals or what they're working on. Eventually, when the market falls, everything gets sold because the nature of investing in asset managers is that they look at their portfolio, they start reducing risk. When they have stocks that have been really holding up well and the market continues to drift lower, eventually they're like, well, I don't really want to sell my losers here because they're already down so much. So what's up? Oh, Microsoft's still holding up there pretty well. Let's get rid of some of that. That's kind of the mentality. And then you see those stocks that have relative strength eventually break down. But anyway, yeah, Microsoft is kind of breaking down in here. And that might not be a bad short. Let's take a look at the M5 chart. And this is going to be our tell. Nice little market bounce there, finding that support. Let's see how high Microsoft bounced. Barely. Nice big market bounce. Microsoft barely bounced. Still orange line below zero. So I think Microsoft still has some downside. NIO, take a look at that. Choppy on the way down. I don't want to forget this point because, trading is very much about awareness, and I've been mentioning this all year. FXI. These are Chinese stocks, and this is the Chinese market down on the low of the year, finishing 2021 with a whimper. No bueno. Not good. Zoom out. There's your high of the year. This is a bear market. If I showed you a stock like that, you would be shorting it all day long. China is the second largest economy in the world. They account for more than 30% of the global manufacturing. When China is selling off like this, that is a huge red flag. Isn't this the country that's way above everyone else in terms of COVID restrictions and getting back on track? If the globe is starting to get its economy back on track, wouldn't you expect that to come through in China before it does everywhere else? In my opinion, yes. So another red flag. Be very careful with your longer term equity holdings right now. Stock valuations have not been this rich since the tech bubble of 2000. That is not good. So let's go back to the normal view here. Know that FXI sets up well for some shorts. So NIO is following that market. Sophie, trying to find a decent short. It might be Microsoft. Microsoft looks like a decent short. Now, this is a strong stock, so I'm only suggesting it on a day trading basis. If it gets through that 50-day moving average, it will also take out that open right there. There's your earnings after the close. So it gaps up, moves higher. That open is a support level, and it coincides with that 50-day moving average. If that fails, then it's going to fill in this gap and perhaps a failed breakout to the downside. There's your 100-day moving average. That is major support there as well. I think it might have a clear path in here, and you're starting to see some shorting on a stock like Microsoft. I hate shorting Microsoft. I wish there were something better that I could short. Tesla's been a fantastic short. I highlighted that a couple of days ago. Let's put up custom search. This is getting to be a kind of a long-winded video. So I need to kind of make some hay here and find some other decent shorts. I'm just going to go in. I'm going to look for bearish on a 4-hour basis and on a daily basis. I'm going to look for fantastic option liquidity, stock below prior day low. Let's see, what else do we want to put in here? Maybe a bearish ADX And let's make sure that in the last, look at this, the last half an hour, the stock having weakness relative to the market. So market up, up, up. We want to see a stock that was actually weak in the last 30 minutes. So let's add that criteria as well. Weak versus the SPY on a 15-minute basis. I don't know if anything's going to come up. Okay, well, there's one symbol. So pretty easy pickings for us. Let's see what this stock is doing. Ay, God, that is nasty. Don't know the company. Major horizontal support being breached to the downside. Let's look at that 5-minute chart. Market up, stock down, looking pretty bad. Symbol is CMPS. Just see how easy that was. Let's make it the pick of the day. Good luck with your trading. Be cautious with your longer term long exposure through the course of December. If we do not rally back to the high, if we do not see some strength, then the market is whimpering and starting to pull down and test those major moving averages. That is not a good sign for 2022. Thanks so much. By the way, please leave your comments. If you like this educational content, help me grow the YouTube channel. I'd love to double its size. I'd love to get to 30,000 subscribers in 2022. Please help me get there. I promise you, I'll keep the content coming. I'm going to keep the trade ideas coming. I'm going to try and teach you how to do this. Thanks so much. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.